Hi everyone, this is Brian Neal with TradeToBeFree.com and InvestBeFree.com, and today I want to show you a recent trading setup in our newsletter to review the performance of it and also to show you a great example of what a lot of people call multiple time frame alignment in a trade, and that's a real key to becoming a successful day trader. Other than trading earnings events and other events for a stock, the other way is through this multiple time frame alignment I'm going to show you more about today. It's really great way to find a really good day trade or swing trade. Again, I'm going to show you that today in this video. Before I get started though, I just want to mention that we are members of the Better Business Bureau. We have been since 2006. We have the highest A+ rating with them, and you can go to the Better Business Bureau online site and check out our URL and find more information about us there if you like. In our newsletter, what we do is we find the top stocks in the market in terms of near-term fundamentals. And what I mean by that are stocks with very strong earnings and sales growth for a number of years, also companies that are beating estimates, rapidly rising future expectations. And these stocks tend to beat the market in the short term by themselves, regardless of the technical pattern that they might be in at the time. So just by picking these stocks or looking at these stocks first for the best technical patterns, we're now a step ahead of other traders and the overall market. And that's why we do that. So in our newsletter, we just have the best stocks to find these great technical patterns on. So okay, so this is the newsletter from a couple weeks ago, and I wanted to show you this because this is a great example of, like I said, multiple time frame alignment. Now this is a stock, Acacia Technologies, and what I believe they do is they have patents. They develop, license, and enforce patent technologies in the United States. Okay, so it's a business services stock, and they have a strong track record of beating estimates, and they have rising future expectations. They also have strong growth expected in terms of earnings in the years ahead, which is a very good sign as well. So, okay, so the pattern that we're trading on this is a bullish inverted J pattern, and I've talked about this in previous videos, and it just seems to be coming up more and more this year. It's one of the strongest patterns that I've seen this year in the stock market, and a lot of traders don't really realize that this pattern exists, and they often don't know the entry point on this, and consequently miss out. So I'm going to show you right now what the entry point is and what to look for. So the bullish inverted J pattern is basically what looks like a J turned over on its side and inverted on a chart. So you can see right here that within this uptrend that's developing here, you have a formation of a pattern, a chart pattern here that looks like an inverted J, and that's why they call it the inverted J. It's also called the inverted ascending scallop pattern. Okay, now the entry point in this pattern is generally a higher low followed by a higher high. That's my favorite entry point on this chart pattern. So if this stock curled over and it went down to here, let's say, and it went up a little bit, pulled back, made a higher low, and then moved up again and broke that previous high, that would be the entry point in the pattern. So it's kind of breaking this new downtrend on the right side of the pattern. That's usually a great entry point. Now sometimes the inverted J does not curl over far enough to really have that higher low on the right side of the base, and that's actually a little more bullish with this pattern, and it's close to a flag pattern, but not quite. You've got that, that sort of that curling over effect, and what that does, it actually draws in short sellers who think that it's going into a rounding top pattern and going down further, and so you've got short sellers that put stops above here, these recent highs here, and that adds more fuel to the fire if the price starts to move towards the top of the pattern, and that's what happened here with ACTG. So the entry point on this pattern is also move above the high. Okay, that's a second entry point. So in this case, we don't have that higher low, and it goes right through the high. That's actually more bullish, and that entry point is the move above, I think in this case, 640. And that's the entry point we talked about in the newsletter when we featured it. So that was the entry point. And, for swing traders who work during the day, what you do is you put a buy stop order in this case, just slightly above 640, so 642, let's say, a couple cents above that high, and put that buy buy stop order in, it fills automatically around 642, and we can see here it worked out really well. The stock moved, 15% almost within 2 days. So that was a great start to a really good trade. Now, the other thing I want to show you on this though is what I talked about before, the multiple time frame alignment. And what I'm going to do is go back here to a 5-minute chart, and we're going to take a look at the breakout point within the trading day. Okay, so excuse me, you can see here on September 1st where the breakout occurred, the price moved through that 640 entry point. Okay, and then right afterwards it went into this horizontal consolidation. Now, if you're a day trader, this offers a really good entry point on a trade. Okay, you've got the real strong pattern on a daily chart on a stock with rapidly rising estimates and beating those estimates, which is key. Okay, you've got the stock reaching that entry point, and you've got this horizontal consolidation, which is another bullish pattern on an intraday time frame. Right here we've got, this is a bull flag pattern, or actually a bullish flag pattern. It's not exactly what I call a bull flag pattern, is a special case of a flag pattern where the stock moves 90% into the flag before it forms the flag, and that's a very, very bullish chart pattern. But this is just a bullish flag, as I would call it, and the entry point in this pattern is above the flagpole. Okay, if you see a stock reach a good entry point like that on a good swing trading entry point, okay, during the day, and then you see the stock consolidate and form a bullish pattern, usually a flag, and then break out that flag just above the entry point on the swing trading setup, that's a great entry point for a trade. And you can see here, like, once it broke out of this consolidation, it was off to the races, and it just took off from there. And like I said, went up from the 640 entry point almost 15% within a couple days. So that's what they call multiple time frame alignment, and it's a great technique to use in day trading if you're a day trader. The key is to find the great swing trading setups first, not just on any stock and not just on any penny stock, but stocks that have really strong earnings growth and or have rising estimates and are beating those estimates. That's a really good type of stock to use with this technique, and you can find those on a website during your free trial. We have a 3-week free trial on the site with no credit card required as I record this, and we'll give you a lot of these setups on these stocks with the really strongly improving fundamentals that can support the big move. You notice that these stocks tend to hold their gains after they make the move, and that's because we only choose stocks that have the big earnings beats, the rising estimates, strong consistent earnings, and all other key factors if it's a growth stock. So okay, I also want to show you another setup here that came out this week, and this is a flat base pattern. I haven't had a video yet on the flat base pattern, but I wanted to talk about this because this is also a very bullish pattern. Now, this was on Facebook, and when you look for a flat base pattern, what you want to do is you want to put the chart on a weekly time frame first, and from there you can find these areas of consolidations where the stock is basically going sideways in a narrow consolidation. The narrower the better. Make sure that the stock is not a buyout where it's already bought out by another company, in which case the price will go sideways like this, even in a tighter consolidation. But there's no upside because the stock's already been purchased. So you want to be careful that that stock hasn't been purchased, and that's why it's going sideways like this. But that's not the case with Facebook here. And with a flat base pattern, what you'd want to do on this weekly chart is look for this horizontal consolidation for at least 5 to 6 weeks, okay, before it goes above the top of the consolidation, which is right up here. And you can see here there was 1, 2, 3, 4, 5, 6 weeks before the breakout, and that's about ideal. Facebook is one of the top growth stocks in the market. We featured this stock back in, I think it was 2013, breaking out of one of its first strong base patterns since when it first went IPO, and it made a huge move since then. And then once a stock does that and the earnings growth and sales growth continue to be strong, you can look for these other patterns as well, such as the flat base. Originally it broke out of a cup-width handle back in 2013, but this is a flat base, and it has all the fundamental characteristics you could want. It has accelerating earnings growth and sales growth recently. It has very strong, consistent sales growth and earnings growth over the past few years. Probably the best growth stock in the market right now. It's a great stock to find this pattern on. You want to see this flat base. You don't want to see more than, say, 15% of a price swing between the high and the low of the pattern. So you want to see it narrow as it consolidates. You want to see consolidating near new highs. You don't want to see overhead resistance as it starts to take off out of the pattern, because we're going to hold the stock not just for a few days, but probably for a few weeks to a few months. So it's a little bit different than a short-term swing trade that we're looking at right now. Yeah, you want to see that tight consolidation. You want to see the breakout on strong volume. That's another important thing to keep in mind. With Facebook here, when it broke out, when we featured it in our newsletter, the volume was nearly 50% more than the near-term average. So it had a very strong volume breakout. The next day, it's still up and moving higher. Okay, so this is a good breakout on the stock, and there's a good chance it'll come back. It'll pull back, probably test this area here about around 126 or so. It'll probably do that at some point, and that would be another good time to buy some shares of Facebook as it's bouncing off that and going back higher. But that is the flat base pattern, and a typical stop loss on this would be about 2.5% to 3.5% below the ideal technical entry point. If it's putting that below your entry point really doesn't mean much, because there's no support at that point that you're working with. So if you want to get the stock as it breaks out, and you want to use a stop loss based on these breakout points more so than where you get in. So long story short, you want to get in right around the breakout point and not too far above it. Okay, and in this case, 3%, 3.5% is probably just below this 125 area, 124 area here. So say 123.90 could be a good stop loss point if you got in at the entry point. And you can also put a stop just below at the bottom of the pattern in this area here. So just below, say 122 would also be a good stop loss point, because the flat base is so narrow that you can afford to drop below there and still only have, say, a 5% or so stop loss below your entry point. And the target on this pattern is generally around 20% above the breakout point. So with Facebook, I could see this stock going to 150 to 160 anyways, and good chance for a lot more than that, because the earnings growth and the sales growth is so strong right now. And another thing about this chart pattern too, and this long-term chart in Facebook, is that we notice that as we move higher and pull back over the last year, we can see that each consolidation is becoming shallower and shallower. We're getting more, aside from the Brexit here in late June, which caused a dip. But other than that, it's been a very, it's these consolidations are becoming tighter and tighter over time, and that's a good sign. So, we're kind of getting to a point now where, the consolidations are so narrow and the breakout is so strong that this stock could go parabolic, and it could go up to $200 too within a few months. That may be what's going on here, because that's a really good sign when the consolidations are getting, smaller and smaller as time goes on, okay, over the past year. So another good sign with Facebook. But that's the flat base pattern, and I think I've covered it now in detail. Again, you want to see stocks that are making new all-time highs with this pattern. We're trying to do this on top growth stocks. We don't want to buy these on, stocks that are growing their earnings and sales 10% a year, or they're growing their sales and earnings by 100% for one quarter or 2 quarters, and then falling off a few months later. You want to find companies that are growing consistently at a very strong clip for a number of years, and there's only a few stocks in the market really that are doing that at any given point. But we follow all the stocks on our site, and we find these stocks as they're breaking out of these patterns before we feature them to you. So so if you haven't yet, go to our site and check out our blog. We also have a 3-week trial, and as I record this, there's no credit card required for that trial, so just go to the site and enter your name and email address. There's also a link down below the video here. If you click the more area down below, or the drop down arrow down below the video, you'll see a link for the 3-week trial, and also a special offer to try the premium service. And we also offer a book that explains our strategies in more detail on our site, and you can get a copy of that on our site as well. So, all right, that's it. I hope you have a great day, and we'll talk to you again real soon.